Hello everybody, welcome to freetradingvideos.com. This is a trade I took in Apple. This is what it looks like on the 4th of December. And sort of an interesting little day trade I did when it opened on the 5th. Nice little gap up. A lot of times gaps will fill on profit taking. The people who are making a lot of money overnight, who are positioned well, decide to take a little bit of money off the table. Typically the stock will pull back until the people who got hurt from the night before, in other words the shorts, decide to start buying to cover to minimize the losses that they were experiencing at the open. However, when a stock doesn't fill a gap, oh boy, that represents a lot of power that's still intact. The sentiment that drove the stock up is intact, and so what people will do a lot of times is wait for the stock to trade for a while, like I did, mark the high that it puts in a first relatively short period of time, say 30 minutes or so, and wait for the stock to pull back to that area. So when this stock started basing like this on its high after not filling that gap, that started to get pretty nice looking to my eye. So I said, alright, if it can ever take out the round number of 184 again, I'm going to get into this thing on a quick little day trade. And so right there on that bar, I decided to enter that stock just above the round number of 184, also taking out the relatively equal group of highs here. And that stock did nicely for us all the way up. And I took a very quick profit here at around 185.62. See how many bars that is, right? Just past the round number. Nice run up this morning, so we're doing really well here. And right in, let's see what this is, on that doji. So very, very good. In this area up here, I took 1/2 of my shares off the table. Great run up, many, many bars up in a row. I'm looking for the stock to consolidate or pull back, and I would ride that. Okay, so you never know what's going to happen next. The stock goes up again. Not bad. A little bit hindsight, of course, but here's our pullback. Very good. 1, 2, 3, 4 bars, culminating in a nice little doji. Heads back up right to resistance. There's a lower swing high, and we'll just chase this thing out and watch what would have happened. So I still have my other half of my trade on this table. Now I'm not going to hold this thing overnight because that represents a good bit of risk, overnight risk, and I wasn't willing to do that with this particular stock at that time. But I am sitting through this, it's doing really well, holding up nicely, putting in a few lower highs now, and it works its way out. There's a higher swing low, even on a little 5-minute chart. This is a inverted head and shoulders pattern. Nice little rounding bottom there. Very good. And right in here, it's getting close to the end of the day, so I decided to take my other half of my shares off the table. My protective stop was the low of the day. It never got taken out, and I walk away from the table. All right, so the trade's over. I'm out. I'm off doing my regular activities, and here I am. There's the next day. So the stock closed. I'm out down here. The next day, the stock gapping. All right, goes screaming through the roof, but I'm out of it. Remember, I didn't want to hold it overnight due to the overnight risk. So, in hindsight, of course, I left a bunch of money on the table. In fact, if I double-click on this, this is where I got in, over here. Right? This is where I wrote it on the first half. Very nice trade. Right? And the stock pulled back, kind of rallied back up, and I got out just before this big day right here. In fact, the stock really never looked back after that. Well, that's hindsight. Could I have entered it again over in this area? Sure. I just didn't happen to play it again. I was a bit nervous about this swing high. And if you look at this on a daily chart, so let's go there now. So I'll go back to, let's say, a 3-month daily. You'll see what it looks like. So here's the sell-off. Here's the nice gap up that we took. Traded at just a very quick little trade here, intraday. The next day it gapped up and never really looked back. But what I was seeing was all this overhead resistance right through here. And I certainly wasn't willing to play long in the face of that, even though Apple is a nice, strong company. You know, anything can happen, and a drawdown like this, from 195 or so, 190 all the way down to 155, can be pretty brutal, even on a good stock. So never let a stock do that to you. Always be very careful with your money. If you could have traded it better, you can go back and look at that, or re-enter it in a nice controlled area. So I hope that helps to see and look over somebody's shoulder at a trade they did, a little quick intraday trade, but that represented a couple points, very, very quick few points intraday on a trade, so I'll take it. All right, thanks everybody for joining me, and hope you have a great weekend, and I will talk to you soon.